is Oded Salomy. I'm the Director of Payment Systems and Settlement at the Bank of Israel. I'd like to share some thoughts about payment methods, payment systems, and digital currencies, and we'll say a few words about where I think the industry is headed. So COVID-19 certainly acted as a catalyst for change and caused digitization across multiple areas. People are saying that we got a decade's worth of digitization in 1 year, and I think that's true. Many shoppers changed their habits, including the elderly. Volumes of contactless payments in physical stores took off. Digital currencies values increased like crazy. Central banks across the world began taking significant moves towards issuing digital currencies. And we've also seen an increased focus on payment data and transaction data as a basis for government policy decisions and tracking the effectiveness of COVID-19 support that governments gave out. One thing that went a little bit unnoticed throughout this period is that even though shoppers significantly changed their behaviors and migrated their payments from in-store physical payments to online payments, and we saw many other changes, the payment systems continued without disruption. It always strikes me how we take that for granted, notwithstanding the fact that it's a result of significant, ongoing, persistent efforts by both regulators and operators of payment systems. So we'll take a look at a few payment methods and see how they were impacted. If we look at payment cards, we saw that CVMs or card verification methods grew worldwide, including in Israel. A CVM is the amount of money I can spend on using a contactless payment method, a contactless card or proximity payment using my mobile phone without entering a PIN code. In Israel, it was up to 200 shekels, and we increased it from 200 to 300 shekels, which captures really the majority of payments in the country, payments made by card. And we did that in order to enable consumers to make payments without having to touch the terminal and transmit a virus or receive a virus. That was a phenomena that we saw worldwide. The CVM amount varied from market to market. Still, we saw that across the world. Card present volumes plummeted because people were stuck at home, so they couldn't go into the store to make a payment. Card not present volumes increased like crazy. Consumers made more and more payments using their mobile apps, internet websites, and frankly, also phone orders, just calling in and making a payment by reading your credit card to the cashier. But perhaps most significant is the fact that overall volumes on cards held steady, certainly in Israel. Last week, we published a press release that indicated that from 2019 to 2020, payment card volumes only decreased by 1%, which is quite significant given the big negative economic impact that COVID-19 had on our economy, and not just our economy, but worldwide. We saw a drop of 1%, where in normal years we see an increase of about 8%, and still this stability in volumes was quite remarkable, notwithstanding the fact that people moved from in-store payments to card not present payments. Account-to-account payments continued to grow. That's not really something that resulted from COVID-19. In recent years, we've seen a big focus on disintermediating many of the players in the payments ecosystem and moving the payment experience to be account-to-account. Faster payments or instant payments are a reflection of that, enabling consumers to make small payment amounts instantly, moving money from their account to another person's account or to a business account. That continued to rise in Israel as well. We have deployed faster payments. Still early days, volumes are still low, still lots of progress to make, yet that continued to progress during the COVID period. A few words about traditional payment methods, checks and cash. Depositing a check in a physical branch of a bank became more difficult during lockdown periods, both because people were stuck at home and also because access to the bank branches was severely limited. And so what we saw people doing is depositing checks by scanning them on their phones. As the Bank of Israel, that is a regulatory reform that we led, requiring all the banks to enable their customers to scan a check and deposit it that way rather than bringing the physical paper check into the branch. We saw that happening and increasing not only nationwide, but also in the ultra-Orthodox communities, the Haredi or Haredi communities, where smartphones are deemed non-kosher, and yet still somehow they were able to make deposits using smartphones in their communities. Cash. So all of us, I think, had the view, certainly before the first lockdown, that it's probably safer to make sure I have a pile of cash at home just in case something happens. I know I have money that I can pay for groceries or for anything else I might need. So consumers not only withdrew large amounts, but also hoarded them at home. And then after lockdown periods, one phenomenon that is very interesting, we saw an increased use of cash, possibly because some consumers, this happened in Israel, but also worldwide, received government support for the fact that they were unemployed as a result of COVID-19. And yet they sold services such as, I don't know, fitness training, piano teaching, or some other freelance service, which they did not want to report because they wanted to continue to receive government support. And that increased the use of cash. There were also large amounts that had been stored at home that people wanted to use, and there may have been other reasons. This is something that's being studied worldwide. So as the Bank of Israel, we have been taking many initiatives that impact the payment space. I'll go through a few of them. We led a countrywide rollout of EMV compliant terminals that are also NFC compliant, enabling contactless payments. That actually triggered the launch of many digital wallets during the COVID period. I think we're counting 8 that have already launched, and the 9th is about to launch, including by multinational companies. I mentioned the deployment of faster payments in the account-to-account space. Digital check, we looked at the features. We are looking at the features of paper checks and thinking about what of those features are something that we want to preserve, and we want to convert those into a digital experience. I'll let you in on a secret. The main aspect of it is that some people write a check without coverage, and therefore they get free credit. When it's a post-dated check, it's not because they don't intend to pay. It's just because at the time of writing the check, they don't have money to make the payment, but they will 30, 60 days later. So we're leading a process during which the banks will enable the check to become a digital payment instrument. We had a very nice event happen during the COVID period, which is for the first time in 40 years, a new bank got a banking license. That bank is called the First Digital Bank. It will be fully digital with no physical bank branches. But in order to operate, it needs to connect to all the national payment systems. That was a long process that we led and is now complete, and they are now live. We're also leading a long regulatory process to give non-bank entities access to our payment systems, be they RTGS or Masav, the National ACH Clearinghouse, or Shva, the National Payment Card System, or the ATM network, as well as others. And open banking, including payment initiation, is something that just launched, I think, a week ago. A few words about digital currencies. There are 3 categories of digital currencies worth thinking about. Central bank digital currencies are central banks issuing a domestic currency in digital format. So it would be us taking the shekel and not only continuing to issue it in paper note format, but also issuing it in electronic format. Stable coins are digital coins backed by fiat currency. So DM, formerly known as Libra, is the digital currency that Facebook is planning to launch, but when it will launch, it will be fully backed, depending on the market, will be backed by the US dollar or by the euro or by a combination of other fiat currencies. That's an example of a stable coin. And then digital assets are kind of all the rest, which are the assets that are not backed by a central bank or by a fiat currency. The best known of that, of course, is Bitcoin, and Ether, I think, is second. Do digital currencies have to be on distributed ledger in format, namely blockchain? The answer is no. We saw the yuan launch in China in several cities now, and that is not in digital format. So interesting to take note of that. Digital currencies and blockchain are not one and the same. And I think it's also fair to say that in the digital asset space, so far at least, digital currencies are an investment alternative and not a payment method. So we ask ourselves, what would it take for digital currencies to become payment methods, and how would we treat them as regulators? So there are two main criteria. The currency needs to be stable. Merchants that accept payment need to know that the value of that payment will remain the same today as it was yesterday, and will be the same tomorrow. So currently digital assets are far too volatile for that. Certainly Bitcoin and Ether and the like go up and down too much in order for merchants to use them. And the digital currency also needs to be ubiquitous. So ubiquity is quite difficult to achieve. Bitcoin is the only one that's beginning to get there, with over $1 trillion in value. That's larger than the circulation value of some of the national currencies. And yet still, it's got quite a long way to go in any given market. Maybe if Facebook launches DM and many people adopt it, because Facebook has so many users, it might achieve that level of ubiquity on the issuing side, but that's not enough. Even if I have that currency as a user because it's been issued to me, where can I use it to make a payment? The merchants, the businesses need to accept it as a form of payment, and that will be a very long process. There is a minuscule proportion of merchants that are currently willing and able to accept digital currencies for payment. There is one huge exception to all of that, and that is currencies that meet unique unmet needs, such as payment for digital art. We do see digital currencies being used as a payment method in that space, and there are a few tiny others. I promised to say a few words about where the industry is headed. I don't really know, but there are questions worth asking and that we think about as a central bank. Will consumer adoption of new technology continue at a higher pace than it was before COVID-19? Certainly during COVID-19, we saw and we see very high rates of adoption of new technology. Will that continue? I think so, and that will continue to accelerate the pace of change. Mobile apps as a way to pay are here to stay. The question is, how will they continue to grow? Will NFC continue to be the dominant method? Certainly in Israel, I think the answer is yes. We're just in the early days of NFC volumes, and I think the answer will be market dependent. In many markets, especially the Far East, QR has grown or will continue to grow. Payment in the cloud or others are ways that mobile apps can work as payment mechanisms. Will biometric identification replace hardware, or will we continue to need point of sale terminals and mobile phone handsets? I think in the long term, biometric identification will replace hardware, and our credentials on file will be stored in the cloud. Will we see increased interoperability among all payment methods? Very interesting. Let's begin with apps. If I have one payment app, will I be able to make a payment which will be accepted by a merchant or a recipient of a payment who has a different payment app? We're seeing moves in that direction, certainly in Europe. And it doesn't only have to be between payment apps. It also could be, for example, can an account-to-account payment be used to make a payment to a merchant who accepts only card payments, for example? I think this interoperability is very, very early days, but will expand and grow, and the various payment methods will ultimately have to learn to work with each other. Will transaction data drive everything else? Well, it certainly seems that way. We're seeing the growth of decentralized finance, embedded finance, open finance, growth of super apps that use transactional data and behavioral data to drive behavior, to sell new products and services, including new types of financing. And I think we're only in the beginning of that. We're also seeing transaction data and behavioral data being used to provide creative forms of underwriting, which goes far beyond payments. And that's a trend that I believe will continue. Big question, will the profitability of the payments industry continue to decrease? Well, I think it depends on the market, and it depends on regulators' appetite to go against populist tendencies. I think in some markets, we've hit rock bottom, and we're seeing the industry being forced almost into adjacent spaces just in order to remain profitable. And I think in other markets, there is still room for payments to become more efficient. I think certainly in the cross-border space, payments will become more efficient and faster. But in domestic payments, again, as I said, it's market dependent. Another big question, will payment brands continue to become invisible and seamless, delivering a friction-free payment experience? That's certainly been the trend, but don't count on this pendulum not swinging back, because I think payment brands are beginning to acknowledge that they're getting to the point that the consumers are just not aware enough of their brand when they make a payment. The consumer kind of doesn't care anymore. I stored my card or some other form of payment in a mobile app and I forgot it, and I just want to make sure the payment works. I think we're beginning to see the pendulum swing back in favor of branding in some spaces, including in Israel. And a big question for us is, will central banks launch their own digital currencies, CBDCs, in production? We're seeing a few pilots across the world. We're seeing large numbers, dozens of central banks engaging in significant projects, looking at digital currencies, partly to protect the sovereignty of the currency over the currency, but also to provide new use cases for consumers and businesses. And I think the answer to this question is yes. We will in the coming years see digital currencies by central banks in production. So I joined the Bank of Israel less than half a year ago. I myself was not aware of the vast amounts of data, research, and information available on our website. We have significant research teams. Follow us, use our data and our insights to inform your business decisions, including in my space and payments. We will soon be publishing the Red Book with lots of very interesting insights, but also some of our shorter publications and press releases should help inform your decisions and planning. Engage with us if you think there are things we should be doing or should not be doing, and especially in the payment space, if you think there are initiatives that I could be leading or perhaps I should rethink in order to improve the Israel payments industry, please let us know and let me know. And join us. Some of us at the Bank of Israel, and certainly my team, are recruiting. We have several positions that are really entry level or a little bit higher. It's an opportunity to make an impact nationally, and it really is the cutting edge of fintech. So we'd love to have you apply and engage with us, and please continue the dialogue. Thank you for your time.